Good day. My name is Mark Woodworth. I am the president of PKF Hospitality Research. I'm joined here in Atlanta once again by my good friend Jack Corgel. Jack, welcome back
Great
from
to be
Ithaca.
here, Mark.
Always great to have you here. And welcome to the current edition of Lodging Insights, Insights to the U.S. Lodging Industry. Jack, I had some actually serious questions to ask you, but I got to start with what is that over there to your left?
Well, Mark, this is a bit of a monumentous occasion because we have a forecasting approach that we keep
Right.
in the black box.
Oh, it's
But
that black box. Okay.
It's this
Yeah.
black box right here, and we, to our viewers of this video, we're going to disclose what's actually in the black box.
You're sure you want to do that?
It's a little risky to our
Okay.
business,
Well,
but
go ahead.
we'll try it. So here's what we have.
Chris, the crystal ball.
So when you look into this crystal ball, what do you see happening in the lodging industry near term?
Well, in fact, we just spent a couple days at the Hunter Investment Conference here in Atlanta, and that was a question that I was asked quite frequently. In one sense, we really don't see anything new. We felt very confident for some time now that 2012 was going to be another good year of progress along the road to recovery. Our RevPAR, updated RevPAR forecast, which we released, I think, a week or so ago, maybe 10 days ago, to our clients and subscribers, showed a reduction from a 6.1 increase in RevPAR this year down to a 5.8. So, I mean, as you know, Jack, in our business, that's really not that material
Right.
change at all. So beyond the numbers, I'm curious, Jack, what are some of the things that you're thinking about today that maybe cause you some either comfort or discomfort about where the industry's headed?
Well, you know, the first time I looked into this crystal ball, I saw your face. But
Okay.
when I look from another angle, I see some spreads that I watch pretty closely. The spread between demand growth and supply growth is probably running about 3.5% now, which is a very good thing.
Mhm.
The spread between ADR growth on a nominal basis and inflation is narrowed a bit to about 1.2, but these are all good signs that we're experiencing real growth in ADRs. Also, when the Smith Travel Monthly data come out, I always look at the top 25 markets, see how many markets are in negative territory for rooms sold and ADR growth. And regularly in the last few months, it's been 2 to 3 markets only out of the top 25. So I think those are all really positive signs for the current conditions. And basically, without serious disruptions, I think the current conditions are gonna persist for a while. Also, we get forecasts from Moody's Analytics, which are instrumental for our hotel forecasting. All of the primary indicators and variables we use from Moody's Analytics forecasts are all quite positive. Real personal income growth at 4%, employment growth at 2.5%, corporate profits as much as 8% in the next few years. So Moody's Analytics is fairly positive about the economy for the coming years. Of course, there are a number of economists who say don't trust the current numbers. I saw one economist talk about the fact that the unemployment figure is misleading in the context that actual tax withholdings were down despite the unemployment number falling as well. So on whole, it's a pretty positive story.
Yeah, that certainly is positive. One of the things that, again, we've been watching very closely is the relationship between leading economic indicators, and those particularly come from the Conference Board. And historically, they've been a pretty good predictor of the directional change in demand for hotel rooms. And as we've seen for the last, I think, 4 or 5 months perhaps now, that there has been a clear decline in some of those leading indicators, which reinforces the view that I know we've had for some time, that the first half of 2012 should be better than the second half of 2012. So we continue to feel very good about that prediction. Referencing back to the Hunter Conference, again, a question that seemed to be asked and came up during every panel: what about these high oil prices? You've studied that in depth in the past. What's your current take on what implications, if any, there are for our business for the balance of the year?
Well, this is where we move the crystal ball out of the way. And oil prices are in everyone's mind, as you mentioned. There are really two effects. There's an economic effect and a psychological effect that we have to worry about. We performed an analysis with the help of our economist, Jamie Lane, in 2011, which showed that from an economic standpoint, if oil prices get to 150 a barrel, then we go into a mild recession. We go into a negative RevPAR territory. Also, we've looked at some studies that show that the fundamental value of oil is around $98 a barrel, which is now running at about 106. From a psychological standpoint, we are not sure how the psyche of the traveler would be affected by a military event or by an event that resulted in some shortages of gas at the pump. So we can forecast certain things based on oil price run-ups, but the psyche of the traveler is a pretty difficult thing to predict.
So my takeaway on that is perhaps possibly the obvious that obviously we need to keep watching that closely.
Yeah, absolutely.
So thanks for your time, for again spending part of your day with to hear some of our current thoughts on the industry, and tune back in soon as we'll have more thoughts to share.
Good day, everyone.
Thanks.